You're listening to TurboCharge Your Business on the number one global business talk and news network on the internet, IBGR, International Business Growth Radio, the world of business at your fingertips. Hey there, you're listening to TurboCharge Your Business, a show for business owners who are tired of just working in the nuts and bolts of their businesses and ready to work on the business itself from a big picture, growth oriented, strategic perspective. I'm your host, Patty Lawrence, founder of Turbo Execs, Money Finder, consulting CFO, and right hand to growth minded CEOs. This season is called 13 Weeks to Financial Literacy, and over the course of the season, I'm teaching you everything you need to know to take your business from confused and chaotic to strategically growing with you in the driver's seat. From people planning to cash flow planning to performance measures and more. It all starts with understanding the story behind your numbers. So let's dive in. This is episode 37, Reading Financial Statements, the Chart of Accounts. Be sure to go to our website at ibgr.network and download the show notes. Today's show is all about reading and interpreting basic financial statements for business owners. And by the end of our time together today, you'll gain insight into the story that is being revealed by your company's basic financial statements. So, what exactly is a chart of accounts? Well, we did a little bit of that work in a prior episode, and we just kind of touched the surface on it. But really, the chart of accounts is really the index of all the financial accounts in your business and in the general ledger. And it's an organizational tool. That's the best part of it, right? It's an organizational tool. And I will say that I've seen so many companies, so many clients come to us, and so many other companies come to us with a really jacked up chart of accounts because it's not set up right in the first place. If it's set up right in the first place, it is an amazing tool for your business, and it can lend itself to great reporting that totally makes sense and totally tells what's going on. It reveals the story of what's going on in your business operationally, right? Because what happens in operations, guess what? Shows up on your financial statements. And that's what we want to make sure that we're able to determine and decipher. It's got to tell the story. Your numbers tell a story about what happened during the week, during the month, during the year, whatever time frame you're looking at. And the chart of accounts is the absolute starting point. It's the foundation, it's the bedrock of the organization of your entire financial life in your business. So, what does it really do? Well, it provides that organization, right? That framework for the reporting. So it basically provides a way for those financial transactions to find their way to the right place on your financial statements, right? That's where you get organization within your reporting, organization within your balance sheet, organization within your income statement, and within your statement of cash flow. That is huge for a business owner because you want to be able to look at your reports and make sense, and you want them to make sense. Sensible reporting leads to insightful reporting, insightful reports, I should say. And it also gives you the data that allows you to make decisions, to make good decisions, because you want your business to be data driven, and you want to be able to take the data that's on the reports and be able to process it, torture it if possible or if needed, and make decisions that are going to allow you to grow your business and make good decisions on what to do next in your business. So back to the chart of accounts. How does it actually work? Well, there's a breakdown. and a breakdown that is consistent across accounting land. So you have assets, liabilities, equity. You have expenditures and revenue, or revenue and expenditures, depending on how you look at it. And those are the major buckets, right? And those major buckets are segregated into areas that some of those accounts are balance sheet accounts. Some of them are income statement accounts. So small companies and big companies follow the same mindset, if you will, the same outline and framework. Although there might be more accounts when you get into larger companies because of how they need to use that data to manage maybe at a departmental level. So there's different hierarchies that can come into play. Um, but really, you're looking at the assets first, then the liabilities second in your chart of accounts. Then the third major section is your owner's equity or shareholder equity. Um, Depends if it's a large company and you have shareholders, or if it's a smaller company and you're basically the only shareholder. Some of the types of accounts um, in the asset section would be cash, maybe if you have a money market or savings account, petty cash, receivables, prepaids, fixed assets, furniture and fixtures, things like that. Liabilities are what you owe to people. The assets are what you own. You can have credit card liabilities. You could have accounts payable, payroll liabilities, maybe some notes payable, loans, things like that. And then the equity accounts pretty much are what you as the owner own. What the value is that you've created over time. So you have retained earnings from prior years' earnings. You have maybe common stock, but you also have what your capital is. What is the value of the business that you've accumulated over time? So those three sets of accounts in the chart of accounts are the structure that actually goes into the balance sheet. And we'll be talking about reading some of these financial statements in another episode. But again, these are the foundational elements that allow for the reporting of your balance sheet, the reporting of your income statement, all of the reporting in your business. So if you're thinking, oh, I use QuickBooks, all of that is driven by your chart of accounts. And if your chart of accounts is a mess, or, and when I say a mess, you're using accounts inconsistently. So you book rent to one expense account one month and a different expense account in another month. Maybe not you, but maybe your bookkeeper does that. We need to talk, by the way, if that's the case. We need to clean that up. So, also, what can happen is when things come in, if you have automated bank feeds, automated credit card feeds that come in, and again, they aren't consistently um, booked to the right account, then that causes problems. So we need to have the structure, but we also need to bookkeep them. We need to account for them in a consistent manner, month in, month out. That's that's one of the keys. So, what else is out there? Well, that again, that's the foundation for our report. So, when those transactions come in, we need to make sure that they're accounted for properly, they're accounted for consistently, and that the structure of the chart of accounts lends itself to running the business and to making decisions within the business. So, are we measuring things that are important to us in these reports? Gross profit, is that important to us? What else is important to us? Is overhead expense. Do we only have overhead expense? Do we have some job labor costs that we need to be paying attention to that is really we need to be paying close attention to, because we need to be able to dial it up, dial it down. Whatever that is, whatever that structure is, make sure that it is in place for you as the business owner to know what's going on at any point in time in your business, and that your books and records are up to date. That's huge. If they aren't, you're not going to be able to make the decisions you need to be making as a business owner on in the frequency that you need to be making. So, bottom line, the chart of accounts is the fundamental framework that every other report in your business from the accounting software side is based on. So you want to make sure that it is organized and a, in an order that is conducive to getting you the information you need at the level you need. We're now going to take a short 2-minute break, and when we return, we'll be talking about reading financial statements and the balance sheet. Check out my collection of free resources at turboexecs.com/turbocharge. And you can continue the conversation with me, Patty Lawrence, on LinkedIn. You've been listening to Turbocharge Your Business in episode 37, Reading Financial Statements, the Chart of Accounts, on IBGR. I'm Patty Lawrence, and we'll be back after a short break.